Hello and welcome to the paid weekly recap for the week ending February 13th, 2026. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the paid system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. Before I move on from the disclosures, I'll also urge you to read characteristics and risks of standardized options available at the link highlighted here. And if you do need any more time with the disclosures, please go ahead and pause the video here. Otherwise, I will get into the recap for the week and a little bit of a look ahead. So I think the big news for this week was the fall in the 10-year yield. We saw interest rates start to come down, and after testing a breakout about a month ago, moving to a new range of 4.2 to 4.3, we broke through that on Tuesday morning. Really a little bit Monday on the close, but Tuesday was the real confirmation on that. Bounce back, retest to 4.2, and then push all the way down to 4.05. Now we're back into the range that had been established for months ahead of the push to a little bit higher interest rates. CPI data on Friday came in a little bit lower than expected, allowing for these yield levels to fall further, less concern about inflation. Overall, this is going to continue to impact sector rotation. As interest rates fall, certain interest rate sensitive sectors, such as utilities, tend to perform well. And we did see some bullish flows into utilities in particular. Now, speaking of the market, we got the S&P 500. Thursday was a weak day. We continue to see concern over tech in particular and outflows in AI-focused, AI-invested names. Semiconductors continue to be okay, but the AI names like Palantir, Microsoft, Meta, all continuing to find a lack of buyers. We're seeing big tech selling in general. The equal weighted S&P looks significantly better than the broad S&P, which is market cap weighted, but overall the market is back at an inflection point and it's a decision time for the market. We're testing support. Do we make a new high and try for that 700 level just a few days later? Or do we finally catch a falling knife or actually, have a falling knife scenario where we get into a bigger break and look for support here around the 200-day moving average and the November lows. Time will tell, but this week should be very telling for the market's tolerance for buying dips. It has been working, and that should be noted. Every time we get these big dips, we have 3, 4, 5 days of recovery to a broad-based light new high before another fall, and then 3, 4, 5 days of recovery back to the highs that occurred this week before the fall. This week is shortened with a Monday market closure, but it'll certainly be interesting to see if by the end of the week we can test those new highs or if this support will fail. Now, speaking of tech, tech has been generally weaker. As you note, we've breached those December lows. We've retested the February lows. Tech did not make a new high in the bounce back this week. It was just getting back into the lower part of the previous range. Overall, tech money flow is out. Small cap money flow has generally been a little bit more positive. While we didn't make a new high this week on Wednesday or didn't quite test the new high, the previous high on Wednesday, we do have an upward slope and we've been holding support at the 50-day moving average rather than the 100-day moving average for the S&P or below the 100-day moving average, looking more at a price point around 600 for tech. So you can see a general flow out of tech and into other sectors. And as I mentioned, some of that's been in utilities, some of it's been in energies. Certainly, though, the big story has been when does the tech rotation out of tech stop and people start to see value there and consideration for taking that bigger risk? Along with that, we've seen an elevated VIX. The VIX closed on Friday above 20. That is not a great sign for the market. There is certainly concern out there. There is fear. We are near the highs for February. Not quite making them, but if we get into a situation where the market falls to start this week, Tuesday, Wednesday, I would not be surprised by a 25 or maybe even a test of 30 on the VIX because we are really testing the key support levels. And if those key support levels don't hold, it tells me there's a lack of confidence in buying the dip this time, that this time actually is different. And each time we fall, the question is this time different? And each time so far, the answer has been no for the broad market. We can buy the dip. Maybe a little bit less aggressively in tech, but there's something else out there to buy. And that's been holding up the market. If this time people just go for the liquidation trade, we will see less rotation and simple reduction of position sizing. And that can be damaging to this market. And so it creates a scenario right now with a lot of uncertainty where this week we did not take a paid trade. The market was a bit too much of whipsaw, just like the prior week. Now, if we find that support early in the week this week, we should be looking at some paid trades for this week. But if not, then we'll sit on our hands and avoid those problems from the bullish or anti-bearish trades. At the same point, we do continue to see other opportunities within the live trading room, a lot of earnings type trades and a lot of other trades within sectors that are lesser loved or have had more recent movements. So please do join us in the live trading room. Vlad and I can talk through our thoughts as well on tech and when that bottom is in. We often do. We'll be on for the morning bell from 9:15 till 10:15, 10:30 Eastern, and from 3 to 4 for the closing bell. So please jump in, ask your questions, see how Vlad and I are looking at this market. We'll happily answer any questions or discuss what we're just generally looking at right now for indications of a bounce back, indications of a potential follow through to the downside, and where the money flow is going. And if you don't have time to join us in the live trading room or you want to reach out to us offline, you can always email us. I'm Keith at yellowtunnel.com. Vlad is Vlad at yellowtunnel.com. We're always happy to answer any questions you may have. Thanks again, everyone, and looking forward to another interesting week with this whipsaw of a market. Thanks again.